Hi, and welcome again to another session of market analysis for today, November 12th of 2024. I'm Giovanni Benacour, and we're recording live today, obviously live, but we're 40 minutes into the open. It's 10:10 right now. So just want to do different time frames, so different moments of, it could be pre-market, it could be now, it could be later on. Just want to change it up. So let's just get right to it. We saw yesterday's trading session where only the Dow Jones closed higher. Meanwhile, investors have raised their exposure to the U.S. equities benchmark to the highest level in 3 years following Trump's victory, indicating that the rally might lose momentum. Market participants are looking ahead to the U.S. consumer inflation report for October, which is scheduled for release tomorrow. The consensus has it at 0.3%. The new administration is expected to include prominent China hawks, and strategists are considering the possibility that Trump's economic policies could drive inflation and influence the Federal Reserve's interest rate trajectory. So as far as for the NASDAQ, we all saw that yesterday it made a new all-time highs, and new all-time highs are bullish. And we haven't yet seen any evidence that the post-election rally is exhausted. At least not yet. The bearish view will likely cite a near-term overbought technical status and a valuation that has become even more stretched. So far, we will have to trade into yesterday's opening. So as we fluctuate to the upside, that's basically where we had, or the London session fluctuated towards. So we can expect that again. I have my high, again, my resistance at yesterday's high. This is all new territory, so this is just really high. That's how you will start measuring, obviously, identifying those moments, those highs and those lows. And so therefore, the first support is yesterday's low. And so we can fluctuate between that, obviously, as we're doing so far, and speculation can take us that if during the London session, we fluctuated to the upside and it forward downwards, because this actually opened here, but we don't know if it opened lower, if it spiked, or if it dropped, unless you were following it. Okay, but at the before the market opened, it was in the red. The index so far as in the open is in the green. So again, let's see this momentum as we have big companies reporting today. Also, will that bring us at least to revisit yesterday's high? That's for the NASDAQ. As far as the S&P 500, it is in the red. That again, that fluctuation to the upside. Let's use that as our level of resistance, and that support. I mean, that support. It could be yesterday's low again, but 60,000 is right there, so you might as well use that as a psychological level and keep that obviously as your levels until the market has either fluctuated, broken it, or just gotten away from it. But so far, it is just very, very lightweight. We are not in overbought territory in the S&P 500 right now on the other side. So keep that in mind. As far as the Dow yesterday, making the only one closing in the green, it made that high. Today, fluctuation, you got to get there, but so far we are just down. We closed at 44,418. And this one opened at 44,411. So we opened with a small gap down as we closed. But let's see if we'll come and fluctuate towards yesterday's half, to half of the body. And the whole range is from the wick to the lower wick. Okay, but in this particular scenario, we want to just measure the body, which is this part of this field, and just somewhere around there in half. That could be our first level of support. If the market continues to trend lower, see, we can go in and take a reversal trade. Then we have the crude oil. So crude oil again also we are using this level of 67.88. We have fluctuated below it, violated it, but not broken it, but it has recovered. So $69 could be a nice target, which we've been there before, right? And some more. So let's see, or you could let's go to a lower time frame. Let's go half an hour and see how that is fluctuating. So it hit it made a double top. So that's a reversal right there. Obviously, in those days we're trading lower. So in this half an hour, we could come in and take a look at the medium, which is a 20-day moving average in the Bollinger Bands. So volatility obviously has spiked, showing us right about, I would say, one standard deviation of that or two. So again, if we are to continue fluctuating to the downside, we could come in and consider this level, or see if this has been the low within this time session or this candle, and it's looking to the upside, not looking to continue or at least come to 69, which it could be acting as a dynamic psychological resistance level. Then we have Nat Gas. Nat Gas has fluctuated completely to the upside. Okay, so let's just use 2750 in this half an hour, right? Let's take a look at daily, see where the daily is. Okay, so in the daily, we did see a fluctuation towards the 270. It rebounded from there. Okay, so let's use 280 and then 275 as our level of resistance for this. Is walk. I mean, it's completely out, and there's a lot of volatility. This is why you want to keep on in the daily. There's a lot of volatility because the market is way outside the. This is a 2 standard deviation, so that's probably a 3 or into a 4. I mean, that's pretty wide of volatility. So that means that there's, and it opened with a gap down yesterday, open up with a gap up, and with a gap up yesterday, also today. So that's where the volatility is coming from. Obviously, be long and just buy. So support. Let's go back and 255, and then yesterday's open for the second one. Okay, so being long, buying. All right, so gold. Gold price declined since terms of electoral victory, and it's as much as about the party as it is the candidate. It dropped to about 2,610, and the lowest price in 19 days. And the dollar index strengthened as it saw more than a 1% gain against most major peers. Now, this is one interesting cue. Following 2016 Trump victory, there was an 11.6% fall in the price of the asset of gold. Since 1976, election of a Republican administration has led to an average 4.5% decline in the price of gold within 60 days compared to an average 3.8% rise for a Democrat win. So can we say that now gold is into a correction mode, or are we in a downtrend for gold? Well, technically speaking, right, we will say that we are in a downtrend or a bearish market if from the high we already have traded 20% off that high. So let's assume, for argument's sake, just that 2,780 is our high. So from that 0.20%, so that would have meant, 2,780 times 20%, that 2,224 will mean that we are in a downtrend, right? Now, corrections, when a market is going to be corrected, it could be 10%. So that would make it 2,500. So 2,500 is going to be our short-term trajectory. That's our target, if you will. So let's just clone this puppy, and where do you go here? And let's just put it right here, 2,500. Now, when will we get there? All right, and what's behind that? Well, look at this. This is a nice copping of congestion, right? This is nice. Look at this. I want to be able to show like a triangle. You see, this way. Let's just price level. No. Basically, what we can do is just draw it. Okay. So we've seen how this level previously is going to be important. So we can speculate that due to the fact that in technical concepts we say that history repeats itself. So will we see in the next 60 days that gold will fluctuate 20% or more, or lower, or how long will it take it to reach 20%, or will it reach 20%? There's so many, obviously, different scenarios, but there we have it, 2,500 previous level of resistance, so now it became a support. So that will be something for us to consider. So far, all right, this double bottom created here at the beginning of last month, right? Let's say a month ago, right? So a month ago, we were here. The market rallied from around 2,600 to that high of 2788, and so far from here the market has retraced 200 points, right? So here is another scenario. Will we see that the market will just be something of such? The market has traded lower, found out support at that rounded support, psychological round number, and from here continue or begin to create an leg or leg to the upside. Reversals obviously could have happened here, but we did fluctuate below that level. So let's take a look at half an hour and see where we are, what's happening in the last half an hour. And we have obviously see that drop, consolidation, drop, a little bit of consolidation, move to the upside. Okay, this could be taken as we began to move here to the downside, selling, repositioning, people losing their, going against this sell. So this is the battle, the consolidation, and then sellers won, continue to move or push the price lower. From here, those that sold up here they needed to obviously come out of the trade to cash in. That could have been here, or obviously here. But let's just say, for example, here's where that started cashing in. Euphoria picked up, oh, gold is recovering, or let's just do a little pullback. Because he found support, boom, and then he found now that resistance does not continue to sell. So that's where we are now, which is oddly enough, again, or not oddly enough, but look where the 20-day moving average is. It's below the market, so giving it that dynamic support that we always talk about. So the direction for gold so far, I would speculate for this week is down. I'm gonna speculate that, going with what we read, what we obviously saw. Now, silver, demand for silver is just ramping up. So we can't speculate, even though we did open with the gap down today. And look at this. We open because this candle opens here. It's been closed, right? So we're going to obviously look there levels 2950, and let's just use 30 as psychological for that, and then 31 target, first resistance, and then 31.5. so far, obviously we're looking to see we fluctuate to the upside, recover, but that obviously this is gonna have some pressure from dollar index as well. So for silver, I'm gonna be a bit more bullish. Copper. Let's take a look at copper. Oh, copper is just tanking after being for so long and just a consolidation, just flattish, lot of movement, spiked up and then dropped, covered, now it's dropping. So $4 is going to be that psychological level. Then let's just use 4.1 as a probable level of support. Let's use the 20-day moving average as our level of resistance, and then let's just use this 29, 428, 427 right here as a level of a first level of resistance. Okay, but obviously most likely we're not gonna get there. This is fluctuating to the downside. Actually, let's see if it'll get to $4. Then Bitcoin $90, 100,000 is right around the corner. Just a few weeks back we were 55. Now we're 90. Well, actually 66, 67,000. But nevertheless, this is I believe we're gonna be seeing Bitcoin. Yeah, it's gonna be continue to move higher. Bitcoin here to stay. All right. Then we have the euro. So the euro fluctuates to the downside continuously. So 105 is that next target. Let's see if we'll be able to reach that between now and then. Let's just use 105.55 resistance. Yesterday's open, and second one 107.5, which that will be gonna be getting there today. So yeah, selling. I believe we're gonna continue to move lower today. Pound as well, just dropping like a yo-yo. 126.5, 127.5. Resistance first 20-day moving average, second 129. Selling that puppy, and most likely the dollar index is just reaching 106. That's where I have my resistance for it. 105 is going to be the support, and as we see that the dollar index continues to appreciate, fluctuate more to the upside, we'll see more pressure on those metals and those currencies. That's it for me today. Let me know if you like it or don't. Thank you and have a nice day.